Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 390 on August the 29th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Opendoor Technologies, Walgreens Boots Alliance, and NIO Inc. And we discuss three new trades on AdvisorShares Trust, Pure U.S. Cannabis ETF, Alt5 Sigma Corporation, and First Majestic Silver Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch, or visit the YouTube channel for the Weekly Option. Now, the U.S. equity markets finished the week slightly lower with less than even 0.5% of change week over week. The Dow Jones Industrial Average lost 86 points, closing at 45,544 points this week. The S&P 500 index lost 6 points, ending the week at 6,460 points. And now it's time for the topic of the week. The topic of the week is Labor Day. The U.S. equity markets will be closed on Monday, September 1st, in honor of Labor Day. On a sad note, summer is officially over in a large part of the U.S., and I love summertime, which is why I live in Texas. Our warm weather will stay for a couple more months, so that makes me happy. Now, I've always looked at Labor Day as the end of summer, which also means the end of summer vacation for some of the largest market movers in the country. I was looking for a bigger move after the weekend, but historical data shows otherwise. Even though there has been some volatility the day after Labor Day in the past, the month of September has historically not been a time of big moves. In fact, September is, on average, the weakest month for the U.S. stock market. The S&P 500 index has declined in September more than half the time, still underperforming every other month. September is a time when portfolio managers look to rebalance after the summer months, and some mutual fund managers are closing out fiscal years. It has also been a month of increased bond market activity, which typically is pulling money away from the stock market. All of this has come from some research, a bit of data that I honestly believe is counterintuitive to what I expected. I'm glad I looked at the historical data. I will stay active in the month of September, but the data may have saved me from taking on oversized positions expecting larger moves. It's always good to look at the historical data when it's available. That doesn't mean that this year is guaranteed to not give us stellar returns in the month of September. It does mean that I will not enter the month biased towards increased volatility and strong moves. I'm not sure if that fits into your trading methodology or not, but I hope finding this out helps you just like it helps me. Always do the research if the data is available. So that's it for the topic of the week. Let's go ahead and get into the trading review of last week's trades. We're going to start off with the cover call on Opendoor Technologies, symbol O as in Oscar, P as in Papa, E as in Echo, N as in November. At the time, the stock was trading for $3.60 per share. I looked at buying that stock and selling the September 4 call at 65 cents. That could give us a return of 29.17% in 4 weeks. Well, shares of Opendoor grew 86 cents, ending the week at $4.46 per share. The call option we sold grew 31 cents, leaving us with a net gain of 55 cents if we were to close the trade out immediately. Now, the stock price is $1.50 above our break-even price, which means this trade is working out so far, which is great. If you feel like it has a high likelihood to stay above $4 per share, you can expect to nearly double the current profit on the trade just by hanging in there. No adjustments are needed at this moment. Expiration is in 3 weeks, so make sure you keep track of the stock and be ready to make an adjustment in the coming weeks if needed. Next up, we have a credit spread on Walgreens Boots Alliance, symbol W as in whiskey, B as in Bravo, A as in Alpha. At the time, the stock was trading for $12.19 per share. I looked at selling the September 12 11.5 put spread at 20 cents That could give us a maximum possible loss of 30 cents per spread. Now, shares of Walgreens Boots Alliance were halted from trading on Thursday due to an agreement by Sycamore Partners to buy the company for $11.45 per share. There's also the possibility that shareholders will receive another $3 per share at some point in the future, but that does not affect our position at this point. The options will be halted and are being priced according to the $11.45 price per share. This means that the $12 strike that we sold now has an intrinsic value of 55 cents per option. We collected 30 cents to sell the spread. That means we will lose 25 cents per spread. Now, I've only had this happen a couple of times over the years while I was actually in the trade. So there's no chance to make an adjustment at this point. The options have been halted due to the stock being halted. So no adjustments are even possible. Next up, we have the debit spread on NIO Inc. Symbol N as in November, I as in India, O as in Oscar. At the time, the stock was trading for $5.53 per share. I looked at buying the September 5.5 call spread for 30 cents. That could give us a maximum gain of 20 cents, or that's a 66.67% return in 4 weeks. Well, shares of NIO grew 85 cents, ending the week at $6.38 per share. The in-the-money call spread we bought is even more in the money. With both strikes in the money, this spread is working out as planned. Now, if stock were to expire at this price in 3 weeks, we would lock in our return of 66.67% on capital. That's great. So no adjustments are needed at this point. You could buy the 5.5 put spread for 10 cents, which would create the box and lock in a guaranteed profit of 10 cents, regardless of where the stock ends. That's still a 33% return on capital in 5 days. Of course, we are planning on capturing the full profit of 20 cents at this point. So I'll remain patient since the trade is winning. Definitely keep track of stock over the next 3 weeks while this trade is open and be ready to manage the trade if necessary. So that's it for the review of last week's trades. The markets will be closed on Monday, September 1st in honor of Labor Day. All new trades on today's show will use the September 19th expiration for monthly options in September. So let's get into the 3 trades for this upcoming week. We're going to start off with the covered call. I'm looking at the AdvisorShares Trust Pure U.S. Cannabis ETF. Symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. The stock ended the week at $5.55 per share. I'm looking at buying that stock and selling the September 6 call at 67 cents. That could give us a return of 20.18% in 3 weeks. Now you enter this trade by buying stock for $5.55 per share and selling the September 6 call at 67 cents. This trade makes the most money if stock prices finish above $6 per share. The break-even price is $4.88 per share. And in real terms, the stock purchase will require $555 and you would collect $67 for selling the option. Next up, we have a credit spread on Alt5 Sigma Corp. Symbol A as in Alpha, L as in Lima, T as in Tango, S as in Sierra. The stock ended the week at $7.87 per share. I'm looking at selling the September 7/6 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Now you enter this trade by selling the September 7 put at 85 cents and concurrently buying the September 6 put for 45 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $7 per share. The break-even price on this trade is $6.60, and in real terms, you would receive $40 per spread that you sell and have $60 at risk. And then our final trade on the week is going to be a debit spread on First Majestic Silver Inc. Symbol A as in Alpha, G as in Golf. The stock ended the week at $9.14 per share. I'm looking at buying the September 8.5/9 call spread for 33 cents. That could give us a maximum gain of 17 cents or a 51.52% return in 3 weeks. Now you enter this trade by buying the September 8.5 call for 89 cents and concurrently selling the September 9 call at 56 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $9 per share. The break-even price on this trade is $8.83 per share, In real terms, you will pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you guys last week for listening on Thursday and allowing me to have a bit of a long weekend out on the West Coast. I enjoyed a wonderful time with friends, and I got to see some amazing nature scenes. So if you haven't made it to Big Sur or Muir Woods, those are two of my favorite places. Big Sur is a long-time fave of mine. Muir Woods is a recent fave, and even better, I got to experience it with friends that I love and who love me. So have a wonderful time this weekend with family and hopefully friends who you love and friends who love you back. And I look forward to seeing you guys next week. Enjoy your Labor Day. Have a happy Labor Day. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.